Hi, welcome back. In today's video, we'll be talking about the accounting equation. Now, for beginners, this is the fundamental framework of the entire accounting process. You need to know this before we even start talking about the principle of double entry. So it is very important. This is the crux of accounting as a beginner in the area of accounting. So when you see this abbreviation, please, I'm referring to accounting. So this is the fundamental framework of the entire financial accounting process. Simple, the accounting equation is expressed as assets is equal to capital plus liability. Assets is equal to capital plus liability. Therefore, capital is equal to assets minus liability, and liability is equal to assets minus capital. Of course, you know the math. If you want to be an accountant, you have to be good in the area of mathematics. So it's just a case of make capital the subject. Assets capital will be therefore be assets minus liabilities, and if you want to make liability the subject, it will be assets minus capital. Now, what are assets? Now, this is at beginner's level. I'm not bothered about the definition according to international financial reporting standards. Assets are simply, in layman terms, the properties or resources of a business organizations. Properties, resources that a business owns. So we have things, for example, if I'm an owner of a business, I have things. I'm going to have things like maybe generator, the building. We're going to have things like, okay, the laptop. We have chairs, we have tables. So properties or resources of a business is simply known as their assets. And when we're talking of assets, we're talking of two types of assets. We have fixed assets and current assets. Layman terms. Currently, we call them non-current assets and current assets. So fixed assets are assets that are used over a long period of time. For example, your building. If you own a building, if you're an owner of a building, you have building, of course, it doesn't expire in a space of 1 year, or even it can span as much as 5 years and above. So those are called fixed assets. We have buildings, we have furniture and fittings, we have motor vehicles, we have land on its own also is a fixed asset. Then we have current assets. Current assets are assets that fluctuate. That means they are assets that can be, or another definition can also be, current assets are assets that can easily be converted to cash within a space of 1 year. Those are also called. So typically it is the opposite of fixed assets. Fixed assets are fixed, they span a longer period of time. Current assets are assets that they are for shorter terms. So resources you own for a business for a short period of time. We have cash. Cash fluctuates. It can go up or go down in a space of 1 year. We have debtors. Debtors are people owing the business. Of course, in this year you may have 10,000 what 10,000 naira being owed by your debtors. Next year it can be 20,000. Upper year it can turn to zero. We have inventories. Inventories are stock you use in your business. So you are into selling of goods. The goods you bought, of course, it fluctuates every year. So those are current assets, and we have a host of them. When we go fully into the final accounts of a business, as the case may be, we are going to be seeing a host of different types of fixed and current assets we have. So liabilities are simply business obligations of the business, the people the business owe, and the people the business owe. Let me know, because the people owing the business are under current asset, that is your debtors. So liabilities are simply business obligation. And also under liabilities, we have two types of liabilities. We have long-term liabilities, and we have short-term liabilities. So long-term liability, for example, you collect a loan from the bank for 10 years. Those are long-term liabilities. Now we have short-term liabilities are things like overdraft, bank overdraft. We have your creditors, the people the business are owing. Maybe you go to the market to purchase items and you have to pay back. Of course, you can't owe people you go to purchase goods for as long as 5 years, 10 years. No. So under liabilities, we have two. We have long-term liabilities and short-term liabilities. Then capital is simply the total money provided by the owner to start a business. The total money used in starting up a business, whether provided directly by the owner or sourced from outside. Those this is what is called capital. It is also known as the net worth of a business or owner's equity. So this is simply the fundamental financial accounting equation. Assets is equals to capital plus liabilities. Capital is equal to asset minus liabilities. Liabilities is equal to asset minus capital. And we know what assets are. We know that there are two types of assets. We have fixed assets and current assets. And you can, of course, define what they are. We know that liabilities are simply business obligation, the people the business owns. And the liability business obligation can be short term, it can be or long term. Then we have also explained that capital is the total money provided by the owner to start a business. The money used in starting your business is called capital. It is also called net worth or owner's equity. So after knowing the core financial accounting equation, then please watch the next video, which is what? The principle of double entry principle. So we are taking it step by step. I hope this video helped. Chat me up in the comment section to shoot more of these. Now I'm trying to decide which videos I should shoot for ICANN students. It has just been in my mind. I'm trying to make a conclusion. So if you know you're an ICANN student, tell me the course you want me to teach. So the highest number between now and middle of August, I will start shooting the videos. But it is a standard fact, a known fact, that taxation is the first in my list, whether for skills level, foundational level, or professional level. It's going to be the first. So thank you for watching the video. Watch the next one, which is the principle of double entry. Bye for now.